Amie, great to be with you today. Hello and welcome to this conversation. Really excited to have you here.
Thank you. Thanks for having me. I'm excited. It's been a great process.
Excellent. So I want to get right to it. You and your colleagues at Elevar are doing something that many would say needs to be done, and I think those of us who are close to the work understand is being done well. But not everybody here is going to know what you do. So could you take a few minutes and just tell us what is Elevar, what do you do, and what do you hope to achieve through your mission?
No, thank you. I think everyone knows Elevar as a firm, but not necessarily what we do on the ground.
Hmm.
So Elevar has been investing for over 20 years now. And what we do is we invest in entrepreneurs who are building distribution models that deliver access to products and services that you and I take for granted. Access to capital, access to quality education, quality healthcare, mobility, affordable housing, things that improve the top line of a household and protect the bottom line and improve livelihoods. And we have been investing at the early stage of the company, really the founding investor of an idea, and helping to build those companies and scale them to become a proof point that investing at this end of the customer segment is a way of creating a lot of impact and an opportunity to build a lot of businesses for this segment of the market. And
Hmm.
by this segment of the market, I would imagine we'll discuss in a little bit more detail is what we call entrepreneurial households.
Which can mean lots of different things. Let's get right to that. What
Yeah.
does that mean?
So back in the day, in the early days, in the early years of impact investing, there was this concept that C.K. Prahalad had coined called bottom of the pyramid. And I think a lot of people have thought about this segment as poor people, low income, underserved communities that are, last mile distribution. Uh, a lot of it is known in the market as risky,
Hmm.
people that are unknown. Low income and poor people is a lot of what would have heard
Hmm.
of. And there's a
Hmm.
bias that maybe these are higher risk customers,
Hmm.
the segment of the market that maybe is misunderstood and maybe unseen. And we've been investing in the segment, and what we've learned is that they're actually quite aspirational. They have a discernment to them of what they want. They want quality. They have a purchasing power. They have a wallet, and they have demands, and they're willing to pay for quality. And so over the years, we've been following this customer segment, and we've learned that they are not as risky as one would perceive them to be.
Hmm. I know you guys have been in this space for quite some time at Elevar. And in addition to being sort of durable leaders, you've also been thought leaders. And you characterize your business in a way that I think is really interesting. You say, and I'm just reading this here from your website, the funds we raise and manage aim to demonstrate and inspire capital to flow into business models that can fundamentally transform the way underserved customers have access to products and services. And I think that's a really wonderful way to think about the communities and the customers in those communities that you're serving. Can you help us understand what does that mean for you when you're looking for an investment, and how do you think about the households as customers?
Sure. So let's take one step back. We have
Hmm.
this framework that has been sort of the base of our investment strategy, and we call that the Elevar Method. And the
Hmm.
method is based on three pillars. One is the customer and the customer demand. So who is the customer? And for us, that's what we call entrepreneurial households, which we'll park for now, but
Hmm.
it's this segment of the market that is underserved. The second is the entrepreneur itself and the profile of the entrepreneur that we're looking to back. And the third is connecting the entrepreneur with the customer, the type of business model that they're looking to develop and how that business model is designed and crafted to ensure that it's meeting the customer where the customer needs to be met. And there's a uniqueness in that that I think is what differentiates the way that we look to invest in businesses. And there, we're not maximizing margins for the bottom line. We're maximizing margins for the customer. We're trying to find a price point and a distribution economics that keeps the affordability with the customer at the center, so that when you scale a business model, you're scaling the price point that continues to meet the customer's affordability and maintains them, as opposed to pricing them out as you scale, which is usually what most venture-backed business models are doing. You sort of start at a certain price point and you incrementally increase that price point over time. This is a customer segment who does not increase with inflation. Their incomes do not increase. They can only afford so much. And you need to build that trust with them and you need to retain them. And the design of the product needs to meet their needs and their challenges. And that can only be done when you can actually get satisfaction feedback from them. You can only figure out what they're going to do in their flywheel to make sure that they're feeding your flywheel as a business model.
Mm-hmm.
And so our method has been designed specifically with the customer at the center. And so when we think about our differentiation in the market, this is the method and the disciplined approach that has allowed us to be successful in picking
Mm-hmm.
entrepreneurs and picking the sort of business models that can enter in the market at the right time to meet that pent up demand that has been
Mm.
building up, that can meet the customer right when it needs to.
You might say you're truly serving the customer
We are, because we've
in a
been
very real
following.
way.
Yeah, we've been
Yeah.
following them. And it's, in a venture like model, when you go this early, you don't have time to test whether or not the product is going to fit in the market. You need to be able to deliver right away. So we don't lose companies between a Series A and a Series B because we're not taking product market fit risk. We know that if we can build a model that delivers a loan, or if we can build a model that delivers quality education, there is pent up demand for that product. It's, can you deliver it quickly? Can you deliver it with quality? And
Mm-hmm.
that's what we're looking for the entrepreneur that we're picking
Mm-hmm.
and we're backing to do. The entrepreneurs we're backing have usually 10 to 20 years of execution experience. We're backing them because they've been serving a customer segment, understanding what it means to build a team, to deliver and execute in these tough markets. And they're eager to take that experience and go downstream and build
Mm-hmm.
it for the mass market because they haven't been served. And cracking that distribution challenge hasn't been taken on, and they're willing to take on that challenge and figure out the
Mm.
solution.
That's pretty cool. But, I don't know of many funds that actually have a strategy that goes that far to understand the end market as well as the entrepreneur. Could you help us dig a little deeper into that? What does that actually mean in practice, and maybe by way of an example, right, in your
Sure.
portfolio?
Yeah. So, we're known as a generalist fund, right? Because we cut across a lot of thematic
Mm-hmm.
areas. I'd say what we specialize in is understanding the customer. So what does that translate
Mm-hmm.
into? What does that mean? So 30% of the time is required to be out in the field. So you
Mm-hmm.
actually need to go out into tier 3, tier 4 rural communities, walk the streets, actually go sit in a Kirana store, go talk to the farmers in the field, have detailed conversations about what are the challenges, what are you spending your money on, what does income look like, what are pain points, and starting to triangulate all of that data and thinking about what's happening in this community, what's happening in that community, how are all of those dots connecting, and then how is that also then translating 1 year after the next year after the next year. Does this customer mean, if they have a phone in their hand, are they actually using that to transact and do
Mm-hmm.
payments, or are they
Mm-hmm.
just using that to get onto YouTube and Facebook? Like, what are the
Mm-hmm.
trends? And does it mean that just because they have X that they're doing Y? What happens after a pandemic like COVID? Now has the trust factor for X, Y, and Z changed? So after COVID, we realized that the trust factor for a telemedicine solution has completely transformed. So now for telemedicine, telehealth solutions, there's a huge market opportunity to bring solutions out to rural communities because that trust barrier that existed maybe 12 months ago is now down. So
Mm-hmm.
now we can bring a solution to that community and start to build trust and start to deliver healthcare in a different way that you
Mm-hmm.
couldn't do a year ago. So it's
Mm-hmm.
that kind of staying ahead of the market and being in the market with that pulse that we have to constantly invest in to create that unique specialty that we've invested in over the last 15 odd 20 years.
Mm-hmm. Mm-hmm. And what markets are you in?
So we have been in India since
Mm-hmm.
2004, and we've also been building out in Latin America
Mm-hmm.
for a long period of time. And right now, I would say most of our future outlook for the next couple of years is going to be in India.
Mm-hmm. We were talking to we talk to funds all the time, and we were talking to another fund earlier this week about the work that they do. Now they provide credit
Mhm.
to entrepreneurs. I suspect some of the similarly profiled entrepreneurs that you might be working with. So different business, but maybe same market. And the same issue came up, which was the misunderstanding between the actual risk if you take the time to understand your market
Mhm.
and the perceived risk that keeps a lot of people away from so-called emerging market consumers, right? Because they
Mhm.
just don't understand the
Yeah.
dynamics.
It's human nature. If you don't
Yeah,
understand it, if you've never seen it, you've never walked the streets, it's really hard to underwrite it. And I think
yeah.
and then nomenclature also gets in the way. So you think of bottom of the pyramid, you think of poor, you
Hmm.
think of low
Hmm.
income. There's an inherent human nature bias that you attach to that
Yes.
vernacular, which is why we've also been very conscious of thinking about how to bring a more positive vernacular that is more demonstrative of what the opportunity is,
Yes.
which is what
Yeah.
has led us to coin the phrase entrepreneurial households and take
Hmm.
us into a little bit more of an opportunistic, forward thinking perspective of
Yeah.
where the opportunity is, which is where we're heading into the future because we truly believe, and if you think about it, the future of most of the emerging markets is this lower level of the economies where the majority of the population sits. It's not in the
Hmm.
top 1%, 2% of the population where growth is really going to be coming from. It
Hmm.
is the 70 to 80% of the population that remains underserved, but
Hmm.
underserved isn't negative. Underserved
Hmm.
just means opportunity.
Sure, it absolutely does. And I love the way you frame that with the phrase entrepreneurial household, because an entrepreneurial household, as you describe it, and as many would think of it in these markets, is one where decisions are made on a day-to-day basis about expenditures
Yes.
with a level of gravitas that you and I probably don't take,
I
right?
mean,
So, so when every decision you make has implications for every other decision you make,
exactly.
you're very careful,
Yeah.
right? And therefore you're also very dedicated to whatever service or product it is that you've decided to purchase.
Yep. I mean, we take it for granted the luxuries of life that we have, that we can get into a car and drive somewhere and be in command of our time. A
Yes.
lot of the population of the world doesn't have that luxury. So we think of entrepreneurial households on purpose because they're entrepreneurial, they survive, they're resilient, they manage their cash flows in ways that allow them to make it through crises, through make it through a COVID pandemic, through make it through credit liquidity issues, et cetera. And they're always thinking about different ways to create income. So they may have three or four income streams
Hmm.
through different seasons. And their households, because it's not just one individual that's contributing to the income streams of the household. There's income generation and investment decisions that are made by not just one person, it could be many people. If you think from a gender lens perspective, oftentimes when you think about lending, it's not just the patriarch that's making investment decisions
Hmm.
or creating all of the income in the house. There is
Hmm.
a matriarch that's also making a lot more of the investment decisions in the house, but
Hmm.
also contributing to the income.
Hmm.
And there are other members in the households that are contributing to the decisions and the income.
And
And there's
oftentimes multi-generational.
exactly. And
Yes.
and there's a tendency to also bucket people in this
Hmm.
segment, like salaried or non-salaried, rural
Hmm.
or urban, which are oversimplifications of how to bucket people in
Hmm.
categories, which is
Hmm.
it, which means that you're sort of limiting the potential of what you can sell or how you product out services and design for solutions for the segment. So if you're an entrepreneur thinking about the opportunity and investment that you could be making, you have to think about this as a household and you have to think about where their needs and their demands are. And
Hmm.
that's how you can create a much bigger opportunity and how you can also grow your business in a nonlinear way. Because if you can serve them, they will serve you back in ways that you can't even tangibly measure. And that's what we've
Sure.
seen through our businesses.
Sure. And most importantly, through loyalty.
Exactly. Trust
Yeah.
is the largest factor in
Yeah.
these communities.
Yeah.
And
That's right.
that's something I mean, I think every consumer good company knows down to its heart. But in
Mm-hmm.
any product or service company that wants to deliver must have that as a core component for success.
Absolutely. Absolutely. So as you know, Ami, the work that we do at the Impact Evaluation Lab is across not only the impact thesis, but also the investment thesis,
Mhm.
and of course, ultimately the financial returns that you provide to your investors.
Mhm.
How do you think about the impact funnel at Elevar? What is it that brings a mission-oriented business to your attention? And then how do you sort of define the impact criteria? And then how does it ultimately win a spot in the portfolio?
Sure. So for us, our impact thesis has always been a business model that serves this customer segment.
Hmm.
Because if you can tangibly improve the livelihood by augmenting the income or protecting the bottom line for a customer segment that hasn't been served
Hmm.
before, that is a tangible impact um, towards any of the SDG goals or any of sort of the iris indicators that you could think of. But for
Hmm.
us, we have an impact framework that has been in place since our first fund, where we're thinking about the breadth and the depth of our impact. So our a community metric that thinks about how deep into the market we can go into. So obviously everybody that we're reaching is within the entrepreneurial household reach, but within that, how much deeper can the business model go over time? So for example, if we're reaching affordable private schools, we may draw a line and say, how many of the schools are we reaching charge less than X of tuition? So
Hmm.
over time, can that business model reach even deeper into the community as it grows and scales, just as a metric? Then our breadth metric is ultimately how many schools can we reach, right? And that's
Sure.
an attractive metric for both a reach perspective, but also just, I mean, that's going to drive your income and your financial returns. But the biggest metric for us that it really drives both the financial and the impact returns is the stickiness metric, which we call the business model metric. It is the glue between the two worlds. And it's important because this is the one that most likely is the one that the entrepreneurs focus on the most. And it is the glue and the combo
Hmm.
of why we don't think that there's any trade-offs between the two worlds.
Hmm.
If you cannot be successful in driving a financial return, then you cannot be successful in creating impact in this space and vice versa. Because
Yeah.
if you cannot drive a profitable business, then you're not going to be in business. And if you're not able to drive the impact, then you're not going to be able to be profitable.
Hmm.
That's sort of the way that we think about it. And the business model metric gives you your sense of satisfaction towards the customer. Is the customer satisfied? Are they coming back? Is there churn? Is there repeatability? The business model metric is designed and determined to help you get a sense of where you're meeting the customer, where the customer needs to be met. And that is a metric that we determine, and it changes as the company grows. So it may be one metric in the first 2 years of business because that seems to be the right metric during that phase of growth. But then as it enters into the next phase, we may alter it because the determination of customer success is slightly different.
Mm,
And so that is the metric that we think is the ultimate it is what drives the no trade-off in the
mm-hmm,
world in the world that we
mm-hmm,
exist.
mm-hmm. And I just think that it is fantastic the way you guys approach that duality of mission, that
Yeah.
there is no trade-off. Both things are important. Neither things are compromised, and everybody wins. The investors win, the communities win, the entrepreneurs win.
It's important because we're going into these communities and building a distribution model that may disrupt existing frameworks that
Mm-hmm.
exist. So there's a higher risk of, I don't know how to say this, but there's a higher risk of, lack of a better word, disruption if we fail. Because if we change the way the business models operate or the community operates, and then we leave, what's going to take our place? Like if we get rid of a pharmaceutical business that was in a supply chain, and then we replace it with something else, and then we leave, what will replace us afterwards? And so there, we have to be conscious of our footprint, and we need to be able to make sure that we're building something for the long term.
And those two things, of course, are not mutually exclusive.
No,
No, they're
no.
they're actually self-reinforcing.
Mm-hmm.
Can we pivot um,
Great.
sort of into the team a little bit?
Sure.
You guys been around for a long time.
Mm-hmm.
You've been there for a large portion of it, although I know not all of it.
No,
Um,
no.
yeah. What is it that makes Elevar special? You know, why do people want to come to work, and how do you think that translates into the success that you all have had?
Sure. So let's start with the founders. So there were four founders, two of which have gone on to pursue other careers, and two of which have stayed, and the two of which have stayed are still together. And so that I think is part of the testament of the longevity of the strategy and the an attracting component of others to come to the team and to the thesis. The other two investment partners that have joined have been around since 2011, 2012. So
Mm-hmm.
again, a really strong base of the partnership. And then the last two partners are me and my colleague Shobha. We came in 2016. So the six of us as partners, we've been around for a fairly long time, and we sort of create the base of the partnership. And we're a unique partnership in that we've got investment professionals and non-investment professionals at the partnership level, and we all sit on the investment committee, and we all have a mission alignment around making sure that we're all in the field. We
Mm-hmm.
all understand the customer and have that deep dedication to the customer. I
Mm-hmm.
personally think of us as, back in the day, maybe not so much so today, but private sector civil servants. I mean, that was originally why
Mm-hmm.
impact investing came. It's like the government can only do so much and the private sector only move down so much. And
Yeah.
so there's this white space that existed where
Mm-hmm.
new models needed to be developed, and thus impact investing came about for this segment of the market. For attracting the rest of the team, I think it comes down to people wanting to find solutions for this customer segment. And I think we've always tried to attract people that have that mission alignment. And we've been able to bring people on board for that. But the
And
partnership has been the strongest root of us throughout the 20 years.
have you ever? I'm sure you have, because every investment team does. Have you ever made a decision and thought, "Hmm, that didn't work out the way we thought it would"?
Oh, yeah. There was a really big learning I wasn't a part of the team at the time, but it was one of the first investments in Fund Two. It
Hmm.
was a big learning investment that shaped a lot of the method today, where it's an entrepreneur that was a little bit more visionary than execution oriented.
Mm.
It was a little bit of a later stage company where they didn't have a handle on the distribution economics, and that formed their opinion on wanting to go in much earlier. I think more recently, we've made an investment in a company where things are moving at a much faster pace now, and having a handle on the market is a much higher demand. The customer's
Mm.
moving a lot faster, regulations are moving a
Mm.
lot faster, technology is moving faster, and we need to be more of a we need to adapt as a team, and competition is growing, and so what
Hmm.
used to work 10 years ago isn't working anymore, and so that's a learning for us as a firm, as we move into the next sort of AI driven, tech enabled driven world that we're entering into.
Yeah, that is something that, in my experience, both as an investor and having the pleasure of interviewing investors, that's something that the best teams do consistently.
Mhm.
Ask themselves where we made a mistake, like you referenced in Fund Two, and then asking the question, okay, how do we change?
Mhm.
The challenge, of course, is you don't want to over change,
Right,
right? A,
right.
a bad decision is not necessarily a comment about your process, although it may be.
It's a constant reflection, and usually one that happens sometimes midway through an investment period,
Hmm.
and definitely right before you go back out to market to raise your next fund.
For sure, for sure, because everyone wants to know what the heck happened.
Exactly.
That's right.
It's
That's
also
right.
a reflection period for the partners before they sign up for their next 10-year journey.
Hmm.
Where do you want to go? What is the thesis?
Yeah.
There's some market heading. And also the biggest question right now is 10-year models. Where is the world going to be in 10 years?
Mm.
Things change so fast. We don't even know what the world's going to look like in 2 years.
We don't. We
And
don't.
business models are changing so fast now. So it's a harder question to ask today than it was 5 years ago.
Yeah. And from a policy perspective, of course, you could ask the question,
Yeah,
what's changed in the last 3 months,
exactly.
right?
Exactly.
I mean,
Exactly.
it's become a very fast-paced world for
Yeah.
sure.
And the customer has become much savvier,
Mm.
because 20 years ago, not every customer had a phone in their hand.
Mm.
Now, every single one of our customers has a phone in their hand. So the access to
Yeah.
information has completely changed. And their savviness has
Hmm.
grown at a nonlinear level. And in
Hmm.
some ways, they've become smarter, faster thinkers and more demanding
Hmm.
in ways where we need to move and adapt, and we're in some ways caught sleeping. So,
Yes.
uh, you know, the shift in the pace and the ambition of the entrepreneurs that need to serve them, that bar has gone up. And so our pipeline screening and the way that we think about selection has shifted, even in the last
Mm.
6 months.
Mm. Interesting. So how has it shifted? Can you describe
So,
that for us?
so I'll give you an example. We were looking at the EV space and mobility.
Hmm.
And in a model, if you think about like just even electric vehicles in the US and just thinking about the logistics of battery and charging
Hmm.
stations and like patience that you
Hmm.
demanded of consumers to say, buy an electric car, but you can only drive so far before
Right.
you run out of
Right.
juice. And therefore, if you want to go on a really long road trip,
Yes.
you really can't.
Yes.
Now, if
I
you're
I recently rented a car. I was in an airport, and I was out in the Southwest, and we were going to drive to the Grand Canyon.
Mhm. Right,
And I was so excited because I got off the plane. There was this nice Volvo electric car, and I was like, oh, great, this is excellent. And I got in it, and I literally got, 20 feet from the checkout. And I thought to myself, hang on.
right,
I
right.
got to drive a couple hundred miles, and then I got to turn around and drive back. And what am I going to do if one of the 6 charging stations in the parking lot
Right,
isn't available?
right, right. Now,
Yeah.
flip that thought process to
Mm-hmm.
I am serving entrepreneurial households whose livelihood depends on
Mm.
their EVs being able to deliver
Right.
goods who now
Right.
have new house and now the demands in India are to deliver within 8 minutes in cities.
Wow.
Yeah.
Wow.
So if you cannot, I don't have time to charge. So batteries need to be replaceable, insurance needs to
Mm.
be like servicing, etc. The demands
Mm-hmm.
of an
Mm-hmm.
entirely full supply chain, end to end working distribution model needs to be in place day one.
Mm-hmm. Mm-hmm.
As a starting ecosystem, who's ready to be turnkey day one?
Yeah.
The industry is nascent. Do you know how much capital is required to completely be turnkey?
Sure.
So that as an early stage investment, we invested in a company. They were going to start, they've had to iterate their business model to figure out how to service this client and meet them
Mm-hmm.
where their demands are. And
Mm-hmm.
that figuring out the distribution economics, figuring out where the go to market strategy is going to be, the right price point, the right entry point, it's shifted just in 6 months
Mm-hmm.
because the demands of the customer are much higher than they were because the flexibility is lower
Mm-hmm. Mm-hmm.
because they're just not willing to switch
Mm-hmm.
because the cost to switch is too high and they're not patient. And so these are the trade-offs that you have to
Mm-hmm.
think about and the timing. And so 6 months ago, the timing was right because there were demands or subsidies. There's all these other reasons to
Mm-hmm.
come to market. And that pent-up demand thesis that we had
Mm-hmm.
was right. But then other things happened in the market that shifted and reality sunk in, the demands of the customer of this 8-minute delivery promise that the e-commerce companies put on to the system
Mm.
that puts pressure all the way downstream.
Sure.
And so all these other factors that you don't necessarily think
Mm-hmm.
of come into the way. And so that's just one example of
Mm-hmm.
the customer moving in ways that we can't control and in the savviness of their wanting to have higher, better quality, better priced products that and aspirations of things that even you and I want
Yeah.
that they have visions of it now before they may not have even known what they wanted
Mm-hmm.
because they didn't have access to even see it.
Sure.
Now the world is truly flat.
Mm-hmm.
Everybody can see
Truly.
everything and do anything and have
Yeah.
access to the best of education. And so it now the world's everyone's oyster. So we have to be able to deliver.
And of course, all of that puts a very fine point on our discussion earlier about understanding your local end user market,
Mhm.
right? And having boots on the ground.
Yep.
You know, it just it's amazing to me how many times other venture firms will go into a new market and think that because they've had success over here, all they have to do is translate all their fantastic MBA generated modeling capabilities into a business over here and they'll win.
Yeah, no,
And of course
it doesn't work.
that doesn't work. It can work in developed markets. It I think is far more difficult as you're saying in emerging markets.
Yeah. Plus,
Yeah.
you need to have trusted partners on the ground and you need to
Yeah, you really
understand
do.
the local dynamics.
Hmm. Let's change gears a little bit if we can,
Mhm.
because I know the work that we did together as we were evaluating Elevar was really, I mean, certainly from our perspective, was fun because we got to understand the way you guys approach things, and you do things, I think, in your own way, which is great, and in an authentic way. I first wanted to start though with a high level question, which is just how do you think about the need for measurement and accountability in this moment and sort of going forward? And what do you think accountability and measurement does for the impact space and the growth more broadly?
It's a really interesting and timely question because, 10 years ago, impact measurement and not accountability, but just measurement was
Mm-hmm.
about showcasing the reach and the intentionality,
Mm-hmm.
in addition to proving that there was an economic financial return
Mm-hmm.
attached to the intentionality of the impact that we were all trying
Mm-hmm.
to prove. Now that some of us have been able to be in this space for as long as we have, and we've proven that there is a possibility to make money and create an impact, now that the outcomes as just beyond the outputs, there's room for proof. And now the scrutiny on making sure that the source of the information around the impact is authentic and
Mm-hmm.
measured properly, just like you would any other financial information, is
Mm-hmm.
those kinds of questions are coming into place. And more scrutiny on the intentionality needs to be coming into the system. And it's not just about a process, but it is about the holistic approach that
Mm-hmm.
managers take that needs to be in place to make sure that if there's going to be any benefit for having an impact thesis, that it's actual real and there's something tangible behind it.
Mm-hmm.
And I
Mm-hmm.
say if there's any benefit to having an impact thesis, I do think that that's a debatable conversation we can have
Mm-hmm. Mm-hmm.
given the times that we're in. But, we'll always stay true to our thesis, irrespective of whether it's called impact or not. And, everyone wants to decide whether or not that's a flavor that we want to continue to add. But we do believe that there is benefit for having intentionality of wanting to create something beyond just a financial return.
Mm-hmm.
And having that measured keeps everyone a little bit honest about where they're heading, because as a company grows, there's always tough decisions to make
Mm-hmm.
in that journey, and you need to remember what your original north star was to ground you
Mm.
for those decisions.
That is so true. That is so true. Having that North Star and understanding why you made that capital commitment
Mhm.
requires that the entrepreneur remains consistent with their own mission.
Yep. And
Yeah.
having the aligned partners that you bring onto the journey,
Yeah.
having it embedded in your thesis, having it embedded into your distribution economics, like where you're
Mm-hmm.
making your money,
Mm-hmm.
and that alignment in the business model is key,
Mm-hmm.
because then you can defend it more categorically.
Mm-hmm.
But that's not always easy.
Yeah. I think this pushback on impact, which is less than the impact, excuse me, the pushback on ESG lately,
Mhm.
is something we all want to be really careful about, because the fact that there are inauthentic strategies out there doesn't mean impact is a bad idea. It
No.
just means we've got to be vigilant.
Yes. And for us, we think of, so impact for us is the actual benefit that a company has onto society, onto individuals, onto
Mm-hmm.
households. ESG, frankly, is how well do you run your company? It's
Totally agree with that.
hygiene. It's,
Yeah.
do you have good governance? Do you have
Yeah.
good policies? Do you treat your
Yeah.
people and your customers fairly? That is the baseline, right? And
That's
so
right.
it technically shouldn't have a label, it should just be.
Mm-hmm.
And given that we work in emerging markets, sometimes the bars are a lot higher
Mm-hmm.
in some of these markets than they are in domestics because of the way
Mm-hmm.
regulations and everything else
Sure.
works. So
Sure.
it really
I
just,
also think the opportunity to behave badly, unfortunately, in emerging markets is higher. So you have to be more vigilant, right?
it used to be. I don't know if I
Oh, talk about that. Okay. Used to be. You think it's gotten much
I
better.
think behaving badly in some markets is just defined differently.
Hmm. Interesting. Okay.
We can have that a conversation another day.
Yeah, that's fine. Some other time. That's right. That's right. That's fine. Have you all at Elevar ever been in a situation where you invested in an entrepreneur who grew their business and then changed their business so that the outcomes they were producing were sort of opposed to what you initially expected?
No.
Hmm.
Well, there was one business
Mm-hmm.
that we invested in whose the idea that we invested in them was for them to leverage their core business to build another business, but they were
Mm-hmm.
never able to get that business off the ground. So it was like
Mm-hmm.
a media business that was showcasing positive stories
Mm-hmm.
of entrepreneurs in rural communities across India. And what we wanted to do is create a supply chain of micro and small businesses and create a marketplace for them to sell their products. But that was right before COVID. And so we were not able to get that business off the ground. Um, but it wasn't that they pivoted, it's just they just weren't successful to get it off the ground. From a mission drift perspective, if that's what you're sort of
Mm-hmm. Yeah.
heading in, no, we've
Mm-hmm.
actually never had a company completely pivot in a mission.
That's a really strong statement,
Mm.
you know.
That's our screening of entrepreneurs and the
Yeah.
types of entrepreneurs. I will say we have a highly concentrated portfolio. Each of our funds has somewhere between 10 and 12 portfolio companies. We
Mm-hmm.
make 2 to 3 deals a year.
Mm-hmm.
So we're looking for a certain kind of entrepreneur that comes vetted, wants to be a part of the ecosystem of Elevar,
Mm-hmm.
and really wants to create that change.
Mm-hmm.
So
Mm-hmm.
most of our entrepreneurs stay in the companies even after we exit
Mm.
uh,
That's great. Yeah.
until it gets to a certain point where it's time for the C-suite change.
Sure. And that happens in every
Yeah.
company
hmm
eventually. Yeah.
hmm Yeah. It
Yeah.
should. It should
Yeah.
happen.
It
And more
should.
so
That's right.
now because of tech changes and just trajectory of
Oh,
growth.
sure. Sure.
Um, yeah.
So let's shift gears again. Uh, at Elevar, you all were part of our initial cohort of funds that we evaluated really to test our own methodology and get real life feedback from funds that we hope to evaluate one day. I mean, we did evaluate you, of course, but and that was a real journey. And I think out of that, you all scored in some of the highest of all of the funds that we were able to evaluate. We learned a lot, but I'm curious to know, what did you learn as we went on that journey together?
So this was an interesting question. I think for us, it was what we learned was the types of questions that you're going to ask across the board and how you are going to compare manager against manager.
Mm-hmm.
And then we had questions with the team on what were you then going to do with that information and how are you
Mm-hmm.
going to benchmark, and then how that was then going to get communicated out to the rest of the community,
Mm-hmm.
and what kind of intentioned result will that create.
Mm-hmm.
So will that be a message of impact creation or practice
Mm-hmm.
assessment? And I think those are two different
Yes.
scores and
Yes.
messages. And depending on that, you have influence in the industry.
Mm-hmm. Mm-hmm.
And it was a conversation with the team on what is the goal,
Yeah.
and what kind of practice did you want to this
Mm-hmm.
measurement and assessment process to
Mm-hmm.
start off to be and then eventually become, because that a practice measurement is one thing, and but an impact creation is something that's lacking in the industry, but it's very judgment based and it's hard to
Mm-hmm.
figure out what's right and what's wrong. But
Mm-hmm.
in a practice assessment, how do you move from just paper to actual intention? Right? People can put things on paper.
Sorry, that's
That's
my
okay.
dog.
So in practice, people can put a lot of things on paper, but then do they follow up? Do they actually do what they say? Do they practice what they preach? And those kinds of components of the assessment was what we sort of got into as part of the discussion, because I didn't want us to score well if we didn't actually practice what we preached. I also didn't want that to be part of the assessment of all the other managers, because it's really easy to just say something than to actually do it.
That is, you've really identified the heart of our perspective as we built out the methodology and as frankly we built out the firm, starting with the idea that we've been investors, right?
Mm-hmm.
We're not just advocates, although we believe passionately in the work. We've actually been investors and put capital to work. And understanding that due diligence process
Yeah.
helps us, I think, identify that connection between what's on paper and what's actually happening in practice.
Mm-hmm.
And what I love to see is, when we're working with a firm and they understand that we understand,
Yeah.
and they sort of say, "Oh, you guys get it,"
Yeah.
you
It's
know.
critical, because if you've been in
Yeah,
the shoes of other people and you know how hard it is, what's
yeah,
realistic?
that's right. What's realistic? That's
Mm-hmm.
right. There's no point in giving someone a quote downgrade
Mm-hmm.
because they're not doing something that's potentially the right way to do it, but in practice, in reality, is just literally impossible.
Yeah. Yeah.
Yeah, yeah,
And what I'm finding is, which is great, is that some of the questions that we're getting from some of our investors are getting savvier. So now people are asking, where are you getting your impact data from the companies? How do you
yeah.
know it's authentic?
Mm-hmm.
Just like, how
Mm-hmm.
do you know the revenue number is real? How do you
Mm-hmm.
know the impact data is real? I am excited about the fact that there is maybe some auditing functions that may be
Mm-hmm.
coming forth. And, we always thought about, wouldn't it be great if impact metrics were audited alongside financial metrics, and we just ring fenced a certain number of impact metrics across each company, instead of having 50 metrics across each company, having a certain number that then got audited, so that there was more of that authenticity and fact-based component to it, so that we knew that those were real numbers. Um, those are the kinds of things that I could see could advance the field a little bit.
Yeah, I mean, I would agree completely with that take on sort of the need for auditing.
Mm-hmm.
In fact, I was just last night. I was with our friends at Impact Capital Managers,
Yeah.
who had their summer party for their Mosaic Fellowship winners, if you
Mm-hmm.
will, which are a group of business school students who get an opportunity to work closely with another firm for the summer. And I had this great conversation with a group of really smart young students, and one of them made the statement that impact evaluation is really expensive. So how can we expect a young firm to do it,
Yeah.
right?
Yeah.
Sort of the cost question. And I paused, and on the one hand, that's a fair statement, and in fact, we have a provisional score to accommodate that, right? Where we don't expect certain things to be happening. But more broadly, what I think is important is to reflect on, for example, FASB, not SASB, but FASB, right? The Financial Accounting Standards Board. There's no company that files a tax return in the United States nor in Europe that doesn't adhere to some set of standards.
Mm-hmm.
And it's just an expectation.
Mm-hmm.
And no one ever says, well, that's too expensive. You might try and find a cheaper auditor, right?
Yeah.
You might
Yeah.
not go with Ernst and Young,
Yeah.
right?
Yeah.
But you are going to find a qualified auditor
Right.
that will do the work to verify your work.
Yeah. The challenge there, though, is it's already such a hard journey to be an impact manager.
Mm-hmm.
To add this extra burden with no reward is an unfair ask.
Mm-hmm.
If we can tie it together
Mm-hmm.
with the financial audits and bundle it
Yeah.
and just make sure that at some point there is a reward
Mm-hmm.
and a benefit for the companies that we're
Mm-hmm.
creating, either a bump in valuations or a first look from investors or
Mm-hmm.
something where the world is
Mm-hmm.
finally starting to categorically see the benefit of these
Mm-hmm.
assets over
Mm-hmm.
others, because now
Mm-hmm.
there's greater transparency. Like, you can invest in this company, but this company creates greater impact
Sure.
because there's
Sure.
transparency, right? It's in your,
Mm-hmm.
it's right there on the paper and
Right
it's
there.
certified.
And ultimately, transparency drives capital.
Exactly, right? Like, B
Yeah.
Corps was an amazing initiative and now it has made its way through, and eventually it has implications on consumer decisions. Maybe
Mm-hmm.
not on the masses, but it
Mm-hmm.
does for some consumers that are out there.
Sure.
Eventually, this could potentially have impact on investment decision makers.
Mm-hmm.
But we won't know until we actually make it a fully transparent process.
Mm-hmm.
But to
Totally
ask
agree with you.
everybody to do it on their own dime when our hands are already tied with so many other things is a very unfair ask, especially since most
Mm-hmm.
LPs don't want to pay for it. So it's
Yeah.
one of those double-edged swords. So it's just a
Mm-hmm.
challenge that we have to.
Yeah, I think that is a great point, and as you know, that's why we built the pricing structure that we did at the Impact Evaluation Lab, because we want to drive capital not just to established fund managers, but to early stage managers who deserve the opportunity to prove the case, to build their mission, and to build a fund strategy that does exactly what you guys are doing, which is drive capital towards entrepreneurs who deserve it. So I think that's a great point. Thanks for making it. I mean, this has been a great conversation. Give us some insight into what's going to happen next. What's the next generation, if you will, of Elevar, and where are you guys headed?
So it's a great question. And it's a really tough question because we've got partners that have been investing for 20 years. Succession planning is a very hard thing. And I'm sure many other GPs out there know how challenging that can be. But we are thinking about Fund Six and very excited to see what more we can invest in. We are also wanting to figure out how to scale all of the insights and the customer knowledge that we've created, the specialization around the customer that we've created. So we created this new organization called Epic World. Epic World is going to have two major business units. One is centered around data and insights. And this data and insights platform is scaling the field visits. So
Mm,
at some point, you can't keep going
wow.
out to the field with man hours. You need to be
Mm-hmm.
able to make faster decisions, and
Mm-hmm.
companies need to be able to make faster decisions. And so, like a Starbucks, they have data mined sites that they can say, you know what, I want to go to this zip code, and where do I want to put my next branch? If you think of rural India or rural Africa eventually, which is where Epic Insights will eventually go, how do you think about go to market strategies in these locations when there isn't a data source to leverage? So, Epic Insights is being built to be able to help companies do that. Take that field visit and add AI and add all these other tools to it to help companies go to market faster. And then there is capital strategies. So not only do we want companies to scale faster, but there also needs to be the creation and the scalability of more companies serving this customer segment. So the ultimate goal of Epic World is to fuel the development of 50 plus blue chip companies, specifically serving entrepreneurial households. Because after 20 years of investing, how many companies can you think of in the impact space that have been built and created just for this customer segment? There's not that many. And so the ambition of
No, there's not.
partners and Elevar is we need more. We need more blue chip
Yeah.
companies to be built, be scaled that are just for this customer segment, that serve and benefit the mass and meet them where they need to be met. And so this is the future. So we at Elevar will continue to do what we do. We help fuel the start of companies and get them out of the gate. And then Epic World will help some of these companies go to market and get to market faster, and also help develop other strategies, get into the sort of the capital continuum as those gaps exist. So Series B strategies, growth strategies, maybe infrastructure strategies. We're obviously going to start in India because that's where we have the greatest strength and muscle right now. But the intention is to move into other markets over the next few years.
That is really interesting, and I'm very much looking forward to seeing where that goes.
Yeah, thanks.
Really, I mean, our mission in the world is to drive capital to fund managers like you who are doing exactly what you just said. So the idea that you're trying to drive more capital and scale that to the entrepreneurs is really exciting.
Yeah.
So good
So
luck and keep
thank
us
you. So
informed. Yeah.
Elevar will stay Elevar, and Epic World, you should check out Epic World's website. They are sort of the research and insight and
Hmm.
data platform, founded by some of the partners of Elevar to help fuel that part of the journey.
Fantastic. Thank
Great.
you, Amie.
You're welcome.
Before we
Thank you.
go, I always like to ask a quick little personal speed round.
Great. Fun,
So if
fun.
you don't mind, none of these are hard questions, so don't worry.
Okay.
So, what is your favorite food that you would eat out but would never cook at home?
Oh, huh. See, here's just a tough question because my husband's like a pretend chef.
Oh,
Um, Eat out, but never at home. Korean barbecue?
ooh, that's good. Yeah, and a little smoky for the
Yeah,
house.
yeah.
What is your favorite food to cook at home?
We really like Mexican,
Mm.
and he's really good at cooking Mexican.
Oh, I'm coming over.
It's also good at Italian. He's
Oh,
good at a
that's
lot.
lucky you.
I know.
Lucky you. And then last question: who's your favorite musician?
Oh, I'm a sucker for Bob Marley.
Oh, I get it.
It's childhood, just an icon that I grew up with.
Yeah, yeah.
Yeah.
Especially if you're in the right mood.
Yeah. Hmm. It's like
Well,
a
thank you, Ami. This has been fantastic. I know I'll see you around the Impact neighborhood.
yes.
So until then, wishing you really well.
Thank you. Thanks for the
All right,
opportunity. Okay.
you bet. Take care.
Bye.